Hello. Welcome back to ICT Trading Concept. Today I'm going to make a video about the trade analysis video I took yesterday. Yesterday was the day after holiday, so everyone was expecting to do something, and that should be a choppy day. So I took an entry before the session started. I mean before 8:30, and the morning session I let it go. At the PM session I took another entry. So I would like to share the reason for taking that entry without any bias. Yesterday I didn't have any bias. Sometimes you don't need bias. You just can mark the liquidity and you can take a trade, maybe a short trade, but it's profitable, bro. It's it's very profitable. Before going to the video, I would like to tell you something which is very important, and I think I should tell it to you before. Uh, that is actually, if you just watch my video, then it won't it won't help you. I waste a lot of time by watching video, and when I went to the chart I saw it's totally different. I'm in the sea, in the middle of the sea. I don't know what to do, which place I need to mark. So what I did, I actually start to mark my chart, and slowly I started to see uh, how to mark the chart in the live market. So you have to do the same thing. If you just watch my video and go away and thinking that you are growing, then you are wrong. You have to do some homework. You have to spend some time if you are really serious about trading. Here I marked some places which I actually shared with you guys. Uh, you have to mark the same way in your chart, and then you will start to see by your own. When you will go to the live market chart, you will see which places are very important and which place is not important at all, which fair value gap you should use and which one you shouldn't, how to do trade, everything. And this is very important, guys. I'm talking to someone who are really new to ICT concept. I know there could be someone who is very old and who knows how to do everything. So I'm not talking to you guys. I'm just speaking someone who actually would like to start the ICT concept. Very, the beginner. So that's the thing. Don't waste any more time. Let's go to the chart. This is my morning session trade. I didn't mark it. It's because I took that trade to the top step funded account. Yesterday actually I took that account. Before that account I had one account to the my Forex fund, and Canadian rules and regulation and also the America, they actually banned the my Forex fund, or they are waiting for some regulation, or I don't know what they will do. But yesterday I took my first trade to the top step funded account, and that was my trade before 8:30. So I will tell you why I took that entry, and how did I be confident. I was very confident that market will go lower as I didn't have any bias yesterday. So you see this high and this high, they're very clean, and this is 1 minute chart, guys. Very lower time frame. 1 minute chart. In 1 minute chart, this equal high, this clean equal high, it you see it actually burst by this candle over here. Market doesn't want to keep the clean high or clean lows. So when market clean this buy side and also tap to the hourly fair value gap, this is hourly fair value gap. If you go to the hourly chart, you'll see this is the hourly fair value gap. So when it has went over there, then got the market structure shift over here, go back again to this 1 minute fair value gap. Very careful, bro. This 1 minute fair value gap, it has given me the confidence to take the short. Why? Before yesterday I have uploaded a video about balanced price range. If you didn't watch that video, you have to watch that video, because in that, if you really understand the balanced price range, you will be more confident to take short or take buy. What I mean by that, you see this gap, this is sell side imbalance, buy side inefficiency. So market went over here and the body closed there, so there is a small portion, it's open, come back down and go this candle. You see this bull candle, it has closed this sell side in imbalance, buy side inefficiency, so there is no efficient place. Now I need to make it, I make it sure that this is balanced. What is the rules? The rules is, when market leave this place and then come back, trade the consequent encroachment or the lower part of the gap and reject the price, then it will be balanced. Price doesn't need to trade that place again. It happens over here. You see, it went over there, the body closed to the lower part, wick just went to the consequent encroachment and break. This is the market structure shift, you can say market structure shift. Or I actually, what I was thinking is, this equal lows, it has broken. When it's broken, I marked this order block. It's because there wasn't any fair value gap. Mm, if you go to the high time frame, maybe you will find some fair value gap. I don't know, but I was on my 1 minute chart. I didn't actually switch my chart at all. So I took the entry to this order block, and my stop loss covered this small portion of the fair value gap. It covered because price could tap over there and then break lower. And you see this sell side liquidity, that was my target, and my last target was this gap, this 1 minute specific, this 1 minute fair value gap. But yesterday actually was my first day of quant hour, so I was pretty much confused about how to manage the trade. I didn't know how to close the partial, something like that. So you see, at last I stopped out over here, and it was a very good trade. So that was actually my morning session trade. That was the framework. This balanced fair value gap gave me the confidence to take the short. That's all. Then the morning session started, and it's, you see, it's very choppy. It's very choppy. It it take this liquidity, it went for this liquidity, it again go higher, come lower, come back lower, go higher. It was just, it was very choppy over there. And in that case of price, most of the people actually lost their account or funded challenge. They lost in that type of price action. So you have to remember, when there is a holiday, the next day morning session will be choppy. Not 100%, but 90% of the time it will be choppy. So I didn't take any trade in the morning session. I was waiting for the PM session. At the PM session, you see the consequent encroachment. That is, if you go to the 4 hour chart, let me go. This is the 4 hour chart. You see this last candle's week, the consequent encroachment actually the middle of this week. So that is the level actually over there. This is actually the consequent encroachment of that week. I was waiting to see something that will help me to take a short, and I was watching the price again and again. From 2 p.m. it went higher, high. It breaks this high, by that high, this high, by that high. If you see the three drives, you can say this three drives, but I am really not fan of three drives. So I was waiting to go to the consequent encroachment and how it trade over here. When it went to the consequent encroachment and break lower, you see the big move, it was suddenly just dropped. This was my market structure shift. This is the breaker, and this low was my target. This low was my target, and finally This is the sell side liquidity. Essentially, firstly, actually, I was thinking that it will go to this low. So how did I take this entry? You see this gap. This gap was very crucial for me. I marked this gap, and you see what, look at here. I took my entry over here. I didn't take entry to the breaker. Why? Because this is buy side in imbalance, sell side inefficiency. So sell side has done over here its job. Market can make this balanced. So it could come to the consequent encroachment. Weak, I don't care. The consequent encroachment, and then it can lift the place. That's why I was waiting how did this candle, specifically this candle, closed. If market would like to make this balanced, then this candle will, you know, it will close outside of this gap. So when it traded the breaker, I was waiting, I didn't take entry, and come back to this gap and closed, then I took entry. And you, you know, the this is because of the spread. They didn't give me the entry over here, they gave me the entry over here. So I was waiting how did it closed. When it has closed inside this gap, i I was confident that this breaker will actually send the price lower, at least to this low. And it happens, my stop loss was just above of the breaker. Market went lower. What happened over here, why I did stopped out, is because I saw this gap. When market gave me a swing high before clearing this liquidity, you see the this low, before clearing this liquidity, when it has given me a high and a very big red candle, I was thinking that this high won't break before clearing this low. I missed this gap. It wasn't over here when I was trading. I totally missed this gap. If I would say see this gap, maybe my stop loss would be above the consequent encroachment of this gap somewhere here. Then my trade will will be completed will after clearing this sell side. But what happened? It has just traded this gap and also the inversion fair value gap lower part, and then go to the sell side. Then market went above again to this gap and also the breaker. It has traded the breaker again, break lower. I wasn't interested to take this trade, but if you miss this trade, then you could take this trade as well. You see this inversion fair value gap, you could take entry over here, market breaker. There is the breaker low, you could take entry over here as well, because this is the last sell side liquidity where market would like to go over there. And I marked this water block, but market didn't go to that water block. It has actually traded the water block weak, not the open, weak, and then break lower, at last cleared this sell side liquidity. So that was the trade I took yesterday, the morning session and the PM session, you can say the morning session actually. And I think it will be helpful for you guys to understand. If you have don't have any bias, then how do you trade. And yeah, that's all. See you guys, bye bye.